You ask a really interesting question here. I think what you're getting at, so there's a bit of an error in what you say, so let's point that out real quickly. So you say if a product has a greater revenue after a tax. Well, it depends what we mean for revenue. Typically, when we say revenue, we mean what the producers get. Well, obviously, after a tax, they were getting Q star for P star, and now they're getting a smaller quantity Q2. And remember, because they're paying the tax, they're not getting P2, they're getting P3. So they've gone from this position on the supply curve to that position. So clearly, the total revenue is going to decrease. I think what you might be asking, though, is more about what we call consumer expenditure. So meaning the total amount of money that gets spent in the transactions. So I drew this up, so consumers were paying, again, P star and Q star, but now they're paying Q2 times P2. And we can see because this area is larger than that area that was given up, then clearly their expenditure is going to increase. So if you're asking if that's going to make their revenue big, well, the reason that's happening, the way that from what we're showing, is just based on where in the demand curve that's located. However, you should also notice that I've drawn the demand curve to be relatively inelastic. That is, this curve here is fairly steep. If I were to take a more flat curve, and give it the same starting point, so it still was going to come through this intersection but be more shallow of a curve. If I were going to do that, remember I would be putting that change closer to the top half of that curve. So what's interesting here in your question is that while while the government would be making a lot of money here because quantity didn't go down by that much, and price increased by a greater amount, that would still be true even if we looked at the top half of this demand curve because we've drawn it relatively inelastic. This is a place where the slope of the curve is actually more important. We don't really ever talk about that, but I could make this same change way up here and the distance from Q2 to Q3 and the distance, the change in price, it would be identical because we're talking about a straight line. So I think your question, it could confuse you because of that. Really what you're meant to be doing is comparing, well, what happens if it's this way? Or instead, what would happen if the demand curve were more, shallow like that? That's the real comparison you're supposed to be making. Hope this helps.